Hey everyone, welcome back to Corporate Decoder, where we unpack those dense corporate filings so you don't have to. And let me tell you, Regional Health Properties has some interesting developments we need to discuss. Forget boring spreadsheets, this is a story of bids, buyouts, and boardrooms. Today we're diving into a report from July 2025, and it's all about a company called Regional Health Properties Inc. They've got some serious drama unfolding with potential buyers. Think of this report as a company's diary entry about what's happening internally, especially big news they have to tell everyone. Now, Regional Health Properties has common stock, which is like a piece of ownership in the company. They also have preferred shares, which are a bit different. This number is like their social security number for the stock market, helping everyone identify them. This is the trading symbol for their common stock, how you'd find it if you were looking to buy or sell it. And this is the ticker for their preferred stock. So some news about where their stocks trade. They used to be on the NYC American, which is a pretty big stock exchange. But something happened on June 11, 2025, and they were actually delisted from there. That means they aren't trading on that major exchange anymore. But don't worry, they haven't disappeared. They've moved to a different kind of over-the-counter market called the OTC QB. It's like moving from a fancy downtown store to a smaller, perhaps less regulated, but still active marketplace. This is where the juicy stuff happens in these reports, the other events that are important enough to share right away. A little while before this current report on July 25th, they actually filed another one on July 18th, and it seems like this new report is a follow-up or an update to that one. Let's talk about this second unsolicited proposal. Essentially, someone or some group came to Regional Health Properties with an offer to buy them out, and it seems like this wasn't the first time. This new offer coming in around June 2025 was to buy up to 100% of their common stock for $4.25 per share. That's a pretty specific price. Now, when a big company's board looks at an offer like this, they don't just look at the price, they want to know how this buyer plans to pay for it. Can they actually get the money? This second offer, according to the report, was a bit light on details. It mainly just said, we'll pay this much, but didn't show proof of how they'd have the cash. Because of that missing information, the board decided this wasn't a strong enough offer to really consider. They thought it wasn't complete enough to be taken seriously as a real deal. Now, this Party B we've been talking about, they're identified here as Black Pearl Equities LLC. And on July 18th, the same day Regional put out their earlier report, Black Pearl filed their own document called a Schedule TO. This is essentially them officially announcing their intention to buy shares directly from the company's shareholders. This is their third unsolicited offer. Notice it's not for all the shares anymore, but for a specific number, still at that $4.25 price tag. So the offer period will be through August, but Black Pearl might decide to keep it open longer. This is really important. Black Pearl's offer isn't a sure thing. There are several conditions they have to meet, and some of these are outside of Regional's control. For example, they need at least 45% of the shareholders to agree to sell their shares. They also need Regional to change some basic company rules about who can own how much of the company. And here's a big one. Black Pearl can back out if Regional does something like merge with another company or sell off a big chunk of its assets. This gives Black Pearl a lot of power to walk away if Regional's situation changes. Just like with the earlier offer, there's still a big question mark about the money. How will Black Pearl pay for this? What will happen to Regional after they buy it? What about the other shareholders, especially those with the preferred stock? None of that is clearly laid out in this offer. Here's a really smart observation from Regional's management. They think Black Pearl only offered to buy less than half the company this time instead of the full amount before, because buying 100% would force Regional to pay back about $34 million for those preferred shares. So by offering to buy less, they're trying to avoid that big payout. It's a strategic move to keep costs down. Regional tried to get more information from Black Pearl's main guy, Abraham Schwartz. He answered some questions like where they plan to get the money, but still didn't really address the really important concerns that Regional had. Fast forward to July 25th, the date of this report. The board met again, this time with Black Pearl's latest offer and what limited clarification they got. And once again, they decided it wasn't a superior Regional proposal. This means it wasn't good enough to be considered a better deal than what they already have planned. It's important to note that one director who represents the holders of those preferred shares didn't vote on this. They abstained, meaning they didn't say yes or no. This is often because they have a different interest, like making sure those preferred shares get paid back properly. So after looking at the offer and the fact that it had all those conditions and missing pieces, and comparing it to their existing plan, which was a merger with another company called Sunlink, they decided the Sunlink merger was way more certain. They'd already done all their homework, signed the agreement, and were even getting ready for a shareholder vote on it. This makes the Sunlink deal feel much more real and less risky than Black Pearl's offer. Another big worry for the board was that Black Pearl didn't have a plan for what to do with Regional after the purchase. They also didn't give any assurance that the shareholders who weren't selling their shares would be looked after. Even though Black Pearl would own a big chunk, they wouldn't fully control the company. So how would they ensure everyone else's interests were protected? These are big unanswered questions. So despite this interest from Black Pearl, Regional's board is still telling their common shareholders to vote yes for the merger with Sunlink. They believe this is the best path forward. This is a standard disclosure. When companies are trying to get shareholders to vote a certain way on a merger, the people running the companies can be seen as actively trying to get those votes. It's just a way to let people know who's involved in trying to persuade shareholders. To get more details about the company's leaders, they point to their 2024 annual report. This is where you'd find out who the top executives are and their backgrounds. Here comes the part where they talk about the future. Companies have to be careful about what they promise. So they include these forward-looking statements, which are basically educated guesses about what might happen. They often use words like expect, believe, or anticipate. But they also had a big disclaimer: all those future predictions are based on assumptions and can be affected by many things, meaning the actual results could be very different from what they're saying. They are basically saying this is what we think might happen, but lots of things could go wrong. One of the biggest risks they mention here is that merging with Sunlink might not go smoothly. It could be harder, take longer, or cost more than they're planning for. This is a common challenge with mergers. Another major hurdle is getting all the necessary approvals. This includes government regulators and, of course, the shareholders of both companies. If they can't get those approvals, or if it takes too long, the deal might not happen when they expect it to, or at all. They also mention that changes in the economy or general business environment could impact their plans. This is a broad category that covers a lot of potential problems. And in today's world, they have to include risks related to health crises like pandemics, which can really disrupt businesses. This is a crucial point for Regional. It seems like they don't directly run the healthcare facilities themselves. Instead, they lease them out to operators. This means their success really hinges on how well those operators are doing. If the operators struggle, Regional struggles. It's like owning a building but relying on your tenants to pay the rent to keep your business afloat. This talks about the company's debt. How much money do they owe? And can they actually make the payments on that debt? This is a fundamental question for any business's financial health. This just reiterates their concern about minority shareholders. If Black Pearl buys less than half, they won't have full control, but they'll still have a lot of influence, especially if they're smart about it. The board wants to make sure the remaining shareholders aren't left out in the cold. And finally, someone has to sign off on this report, making it official. Here we see the signature of Brent Morrison, who is the Chief Executive Officer and President of Regional Health Properties. He's the top boss, giving the company's stamp of approval on this report. So what's the big picture here for Regional Health Properties? We've got a company that's already moved to a less prominent stock exchange. They're trying to get a merger with Sunlink done, and it seems like the board is fully committed to that. But out of nowhere, a potential buyer named Black Pearl Equities has come along with a couple of offers. While the price looks okay at first glance, their offers are pretty weak on details, especially when it comes to how they'll actually pay or what their long-term plans are. The board sees the Sunlink merger as much more solid concrete, where a major red flag for Black Pearl is their lack of transparency and the sheer number of conditions attached to their offer. It feels less like a serious proposal and more like a way to stir the pot or maybe pressure Regional. The fact that Black Pearl seems to be avoiding a full buyout to skirt a large payout for preferred shares suggests a focus on cost saving rather than genuinely wanting to invest in and grow Regional Health Properties. The company's reliance on operators for its revenue is a significant risk that can't be overlooked. It means their financial health is directly tied to the success of other businesses. Any hiccup with these operators, bankruptcy, poor management, or even just not paying rent on time directly impacts regional. Overall, regional health properties seems to be in a delicate position. They have a planned merger that offers more certainty, but they're also fending off unsolicited offers that, while potentially disruptive, haven't yet presented a compelling alternative. The key for investors will be to watch if the Sunlink merger goes through smoothly and if Black Pearl makes any new more substantial moves. What's your take on these competing offers and regional strategy? Let us know in the comments below if you found this breakdown helpful and want more of these deep dives into corporate filings. Please hit that like button and subscribe to the channel. And don't forget to join our Discord community for even more discussion and analysis. Thanks for watching, and we'll see you in the next video.